Good morning, Tony Virtue and Partners speaking, and welcome to our monthly update. Majoring, I guess, on the budget, but I'll just say a few economic points first of all before we get there. Surprisingly, CPI down, and as an effect of that, we have a reduction in interest rates on the same day as the budget. So this is quite important, and interest rates again at a record low. Probably relatively good for equities if that continues. Equities, in fact, doing quite a lot better since we last spoke, and up 12% since the low of earlier in the year. So getting to the budget, well, predictable perhaps, future tax cuts for companies, which would ultimately feed its way through into probably better wages, but the reality is we do live in a global world. If our company tax rates are much higher than our competitors, that's not a good story, and we're certainly quite high there at the moment. How's it going to be funded? Well, probably a long time coming, but superannuation looks like the main target. Fairly contentious though. I'll break this into three categories. That which is relates to balances at the moment, and the contentious part is the retrospectivity of this. That is that people who put money into superannuation in good faith in the past, since 1 July 2007, and they paid tax on selling assets to do that, may now have to unscramble this egg. And listening to the reply last night by Bill Shorten, it may well be that Labor won't support this, so I think they might have another crack at this and get a better outcome. But the intent really is to limit how much you can put into super and how much you can get out on a concessional level. On the contribution side, currently $30,000 if you're under 50, $35,000 above there. They're looking to cut that back to $25,000 from 1 July 17. And by the time you pay a bit of tax on that, that's 15% if you're earning under $250,000, 30% above that. There's not too much going into the tin at the end of the day there. There will also be some tightening on some of the earnings. Some of the earnings at the moment, which are tax-free, will be taxed at 15%. Many of you are holding Australian shares which are paying fully franked dividends at 30%. That could actually chew up a lot of that tax. So with a little bit of structure there, that may end up being fairly neutral. The government is also introducing some opportunities to invest in some startups where there'll be some tax breaks, and again, we're anticipating that superannuation will benefit from that. So with a little bit of shuffling around, there may not be too much in this, but again, it's a while away yet. So I think the message is just hold off. Let's just see how the politics plays out, and over the next year or so, decisions will need to be made. But the retrospectivity is a problem, and I think they'll need to find a better way of resolving that. We're expecting the election to be called on Sunday, so that will be a 6 to 7 week period of caretaker mode for the government. That's probably going to be a bit of drifting going on, and everybody reading Newspoll and forming their own views. And then 2nd of July for an election that clearly will be important for all of us. So there are full details on the budget on the website, but the general message is that this will be a time of wait and see, I think, and let's see how that plays out. So good investing. Talk soon, Tony.